Ajinomoto Berhad was established in 1961 and is one of the earliest Japanese company in Malaysia. It is a public listed company on Bursa Malaysia, reflecting its strong market presence and credibility. The company specializes in food seasoning and nutrition related products, with operations including manufacturing plant in Bandar State and a corporate office in Kuala Lumpur. Guided by its mission Eat Well, Live Well, it focuses on innovation, sustainability, and improving quality of life. This slide explains interim financial reporting based on FAR570. FAR570 is a standard that sets the minimum requirement for what company must include in their interim financial report. Interim financial reports are prepared for periods shorter than a full financial year, such as quarterly or half-year reports. This report helps provide timely financial information to investors and stakeholders. The standards also explain how financial information should be recognized and measured during this shorter period. Company can present either full set of financial statement or a condensed version depending on their reporting needs. Overall, FAR570 ensures that financial reporting remains consistent, transparent, and useful even between annual reports. This slide shows two significant events for Ajinomoto Malaysia Berhad during financial period. First, the company declared and paid dividend to its shareholders, including a final dividend of approximately 24.8 million in June 2025 and a special one-off dividend RM128.9 million in May 2024. Second, the company recorded a gain about RM94 million from the disposal of assets held for sale, especially the Kuchai Lama land. In summary, Ajinomoto recorded a significant gain, and the land disposal also paid a special dividend to shareholders, reflecting the strong financial performance during the period. In this slide, we can see the impact on Ajinomoto financial position and financial performance. The financial position side, when the company pays dividend, it reduces retained earnings and cash, which affect liquidity and overall equity, while change in assets such as a decrease in non-current asset and increase in cash indicate a shift in the company asset structure. On the financial position side, dividend payment do not affect profit directly because they are distribution of earnings, not expenses. However, profit may appear to increase due to a one-off gain, which does not reflect a company's normal operating performance. Overall, this means that even if profit look higher, it may not represent sustainable or long-term business performance.
We are going the interim reporting period of Ajinomoto Malaysia Berhad. Ajinomoto use quarterly interim reporting in compliance with Bursa Malaysia requirements. This means the company prepare financial report every 3 months. All interim financial statements follow the same accounting policies as the previous annual reports. Interim reporting enables a meaningful comparison of financial performance and position over different periods. It helps stakeholders to monitor the company's progress. This slide shows the reporting period for the current and comparative financial statement of Ajinomoto Malaysia Berhad. First, we look at the statement of financial position. The current interim period covers 6 months from 1st July to 31st December 2025. The comparative period covers 12 months from 1st April 2024 to 31st March 2025. Next, we move to the statement of comprehensive income. The current interim period is 3 months from 1st September to 31st December 2025. The cumulative period is 12 months from 1st January to 31st December 2025. For comparison, the comparative current interim period is also 3 months from 1st October to 31st December 2024, and the comparative cumulative period is 12 months from 1st January to 31st December 2024. Next, we move the statement of change in equity. The current interim period is 9 months from 1st April to 31st December 2025. The comparative period is also 9 months from 1st April to 31st December 2024. This allows a direct comparison between the current and the previous year over the same durations. For statement of cash flow, similar, the current interim period is 9 months from 1st April to 31st December 2025. The comparative period is also 9 months from 1st April to 31st December 2024. This slide explains under MFRS 8, an operating segment is a component of an entity that engages in business activities and earns revenue. MFRS 8 requires a company to disclose information about different parts of their business. This helps users of business segment of better understand how each segment performs. It also ensures that financial statements provide a clear and complete picture of the company operations. The operating results are regularly reviewed by the Chief Operating Decision Maker (CODM). The CODM is responsible for making important business decisions. The CODM is not necessarily a specific job title. It can be an individual or a group of people. This slide shows the Chief Operating Decision Maker (CODM) of Ajinomoto Malaysia Berhad. On the left, we have Mr. Yung Pung Ching, who is the Executive Director of Ajinomoto. He played an important role in reviewing the company's financial performance and making key operational decisions. On the right, we have Ms. Noriko Fujimoto, also an Executive Director of Ajinomoto. She is involved in strategy planning and decision making to ensure the company achieves its goal.
There are two types of segmental report used in financial reporting, which are business segment and geographical segment. Business segment is divides financial reporting into several business lines or division within an entity to provide a clearer understanding of its performance. Entity is required to disclose revenue from external customers for each category of related product and services. If such information is not readily available and the cost of obtaining it is excessive, the entity must disclose this fact in the financial statement. In Ajinomoto Company, the business segment consists of two segments, which are consumer and industrial. For the consumer segment, it focuses on the manufacturing and distribution of household food products, including Ajinomoto, Tunic, Seri Aji, and other seasoning products. For the industrial segment, it involves in the production and distribution of monosodium glutamate (MSG) for industrial use, industrial seasoning, and related food ingredients. Next segment is the geographical segment. A company is required to provide financial data categorized based on the geographical areas where it operates. It also required to disclose geographical information unless the relevant information is unavailable for the cost of preparing it is too high.
So, segmental reporting. Today, I will briefly explain the importance of segment reporting in enhancing transparency and understanding geographical risks and opportunities. Firstly, segment reporting improves transparency of business performance. It allows users of financial statement to see how each business segment contributes to the company's overall result. By separating different products or services, users can clearly identify which segments are profitable, which are underperforming, and which generate the most revenue and assets. This helps stakeholders make a better decision because they are not relying only on certificates, but on detailed performance of each segment. It also enables a better evaluation of management performance, operational efficiency, and the long-term sustaining of each business activities. Secondly, segment reporting provides a better understanding of geographical risks and opportunities. Since companies operate in different regions, this disclosure helps users assess exposure to risks such as currency fluctuation, regulatory changes, and economic instability. At the same time, it highlights which regions are growing and contributing positively to the company's performance. This gives a clear picture of where the company is competitive and where future expansion is possible. In conclusion, segment reporting is important because it enhances transparency and provides valuable insight for better decision making. We can see that as at 31st March 2025, revenue and segment profit have increased significantly in both the consumer business segment and the industrial business segment. Compared to 31st March 2024, revenue and segment profit show that the business is performing well and has grown significantly in terms of revenue and segment profit. This indicates that investors are more likely to invest in Ajinomoto Malaysia Berhad.